Alright, so this is a continuation. So as I was saying, price came down here, and this is a W, showing you that price will definitely reverse over here. So here is the first leg of the W, and then the second the impulse leg down here, which is a reversal and then a move up. Alright, so now when price gets here, you should expect a buy from here, because this is a retest to this line over here. Alright, because price has already broken out and then came down to make a retest, and then over here you can see an M here, an M pattern here. There is as well at the same time a double top here. Okay, so this on Euro USD. As I said, the first and then the second week are very important. Alright, you use the first week and then the second week to project. Now let's look at the reason why this trade over here, or price breaking out of this zone but eventually came down again. Okay, so this is a quick one. This is to induce traders to go long, and then after there is a reason why price break up here but didn't continue, but rather moved down. All right, so these are some of the things that as a trader you need to know. Okay, now we all know that people normally trade the breakout and then breakout and support. Okay, so if price break out of this zone, what happens to the breakout and support traders? Quickly we go in for a buy, because this is another this is another push up. All right, this is another push up and then a reversal down. So if you move to 1 hour, you will see it clearly what I'm saying over here, that here is it. Okay, now over here here is a consolidation zone. All right, so what happened? Price move up, down, up, 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 multiple pins up, and then another pin up again, pins up, and then as you can see a doji over here, a doji here, and then a hammer here, a doji here, and then a hammer here also, and all these things are showing you a reversal signal. Okay, meanwhile as you can see, price moved down here to this zone, so traders expect what? A fall down, a fall down here. Well, they give you the signal that price is coming down. All right, and let me show you this is the market makers move. All right, this is a few about what the market makers do. They throw you this pin up here and then give you a signal that price is moving down, and then eventually they give you these three vector candles, which is a bearish one. So what do traders do? As a retail trader, you enter this trade selling. So you set your stop somewhere here, maybe 25 to 30 pips. All right, 25 pips over here. But what happened? All of a sudden, within an hour, price goes up there to pick your stops and clear the board. All right, that is one. Two, as price goes up, people that place their pending order here those pending orders will be triggered. All right, that is buy stop of traders. They place their pending order above the zone, above the resistance zone, thinking that when price goes up, breaking this zone, which is this line, breaking this zone, it's gonna what? It's gonna buy. So they place them here, trigger them, and then move against them slowly. Now look at this. Look at this. When price came here, price consolidated on the line, exactly on the line. All right, so what do you think will happen? You wait for a pullback. That is the mentality of what? Retail traders that trade breakout and support. All right, you're waiting for a pullback here. So what happened? A lot of people enter with the idea of buying up. Then what happens to you next is they shift the market away from you in 3 vector candlesticks. This 1, 2, 3. Okay, they give you the hope that you will be coming out. Well, you will be in a trade thinking that let it go 1 pips, 2 pips, 5 pips positive, and then I'll come out, let me break even. All of a sudden, within an hour, they shift the market away from you again. Okay, so all these are trap moves of the market makers that you need to know. A serious trap moves that if they don't tell you, you will never know. So it's all about knowing the direction of the market. When you know the direction of the market, whatever they do, whatever thing that they do, you just sit down quietly and then be looking at them, because definitely market will go in your favor, whether they like it or not. Okay, so assuming you enter selling here, and then you place your stop up, and then your stop get triggered, you don't have to worry. Just hold on at the right time. This is a pull down here, and then an upwards again, and then you enter selling. Even with this impulse leg here, you can begin to sell over here. All right, and target maybe 50 or 60 pips. Okay, this is about 117 pips down here. So if you target 60, 70, 80 pips here, that is not bad for you. Okay, and then over here too, as you can see, an M here. And one secret of the market is that whenever a market is about to make a unit turn, expect an M or a W. Where you expect a W is when it's a downtrend. Alright, when price is moving downwards and then it's about to reverse, expect a W or a double bottom and then a rise up. The same way when price is moving upwards and then you expect a reversal, then you must what? See this, a double top before price reverse. Price will never reverse without these two. And then the third one is a head and a shoulder. Alright, a head and a shoulder. So for you to trade head and a shoulder, double bottom and then a double top, then that means price is about what? Reversing. If you don't spot a reversal zone, please don't trade a double bottom or a reversal, a double bottom or a double top. You can trade a double top or a double bottom when price is about reversing or going in a different direction. Okay, that is where the double bottom and then the double tops are what? Are valid, or that's where they can work properly. All right, example is this one. As you can see, price moved up, and then all of a sudden drop down. All right, and then here too, here is another one here. W here, and then an upwards move. Okay, and then in a bigger picture, this one here, first leg, second leg, up to the trend line, down here. First of all, went up here again, and then came down, didn't break this zone, and then didn't break this zone as well. Alright, though price through multiple pins down here, multiple pins down here, pins down here. And then another thing too is this, you'll be looking at them. You see the pin here, this caused a lot of damage. Alright, a lot of damage to traders. Well, now when price came down here, you see that they didn't come down to this zone. There is a reason. You may be in a trade thinking that, oh, let me break even, let it go 1 pips, 5 pips negative, and then let me come out. All of a sudden they shift the market away from you, and you will never get a breathing chance, a breathing space to breathe. Then you force yourself out. And one thing that you need to know as a trader is this: we have people that make the market. We call them the market makers. They see everything you do, every movement, everything that you do on the chart. Alright, they know the amount of money you are trading with, they know the kind of money you are left with, they know people that are in margin trouble, people that are about to draw, that are about to blow their account, and then they manipulate the market by widening the spread. So all of these things are things that you need to take into consideration when choosing a broker for yourself. Okay, you need to know the type of broker you use. There are some brokers, they manipulate the spread a lot, they open up the spread, pick up stop losses, and then all of a sudden they move the market out of there, they get the hell out of there. Okay, so these are some of the things that we will be looking at, how to beat these guys. All right, trade in line with them. Okay, wait for them, do their damage, and then we also follow them. Wherever they go, we also follow them. Know the right time that they do these moves. Okay, we have times that they normally do these moves. We know them, and then we go in line with them. So thank you very much for this video. See you in my next video. Bye.